Thank you for tuning in to another edition of the Vulcan Report. This end of day report for trading on Friday, August the 19th, 2016. One thing I want to say real quick is that I apologize to those who have not received their coursework material, excuse me, as of yet. Excuse me. If I haven't gotten back to you as of now, let me explain. The response has been so overwhelming, I must say, it crashed my Gmail. Excuse me, and I was locked out of it for a short period of time. So I will be playing catch up, and I will be responding to everyone. So just be on the lookout. I will be responding and getting back to everyone who inquired or have made their purchases. So I'll be getting with you over the weekend, and you'll be all set up because come Sunday night, Monday morning, it's time to get in here and bang it out. So once again, I apologize it's taking so long for some of you, but due to situations beyond my control, here we are. But I got your back, no worries. All right, moving on. Let's knock out this Bitcoin. For the most part, yawn. Nothing happened. We just had an inside week instead of an inside day. We have an inside week. We're trading inside of the previous week's bar. Nothing to really talk about. Very quiet. Market tried to muster up a bit of a recovery, but it has fallen short. And I do believe that in part is because of the U.S. dollar. The U.S. dollar really took it on the chin this week and really has not recovered. I mean, the Fed came in, excuse me, today and tried to rescue that dollar, and in doing so, they did it at the expense of the stock market, the bond market, and the precious metals. So while they were intervening in the dollar to save it, that caused a cascade in the others. Now, as you know or don't know, that is not supposed to be the case. That's not supposed to happen. Precious metals and bonds are a safe haven, all right, when currencies are under attack, so to speak, all right. So if the dollar is going down, and that's going to help push up the value of your commodity sector, okay. So crude oil, gold, silver, cattle, soybeans, those are all commodities. So that's supposed to help push up those prices. But what you saw today was a recovery in the dollar and then a weakening of everything else. So basically, when money was coming out of the stock market, it was also coming out of the bond market, and it was also coming out of the precious metals markets. You would say, why is that? Well, technically speaking, they outperformed the currency this week because the dollar was down. So being that it's Take Back Friday, what did people do? They take profit, take money off of the table. So there was really no safe haven to go. People were flying to cash, and that helped push up the cash market, the U.S. dollar index. So there you go. But in the Bitcoin scheme of things, like I said, it really follows the U.S. dollar to a T, and it's going to perform like it's performing. Now, yeah, it bid up all the way up here like this, but when you look at the grand scheme of things, so did the U.S. dollar. So, not a lot to write home about on this one. I will say the fact that it finished somewhat green for the week is right there with the analysis of the weekly pulse wave that called for this action. It said that you could experience a wave of buying this week. We had a rally alert for those of you that subscribe to the weekly pulse wave price triggers. You would have saw that on your sheet that the Bitcoin had a rally alert there. And the problem though is that the Bitcoin really didn't do a whole lot. Technically speaking, it really didn't trigger a buy signal. It rallied off of its lows, but it failed to trigger a buy signal. So even though we had the rally alert, it wasn't powerful enough to materialize into a trade. So we did not get into the Bitcoin this week the system was on the sidelines. It did not participate in the recovery rally aspect of the Bitcoin. That would have been impossible. Couldn't do it. So what did it do? Well, for the most part, the system has been short in the Bitcoin and waiting to for some type of a recovery. And for the most part, in a way, all the Bitcoin has done is tried to come back to where it first hit that acceleration point back in here, and you see the spike down. So all I did was recover, a portion of that. But for the most part, like I said, the system, has a nice short built in here. The last inflection point was from the 590.69 price. Well, guess what? That was a continuation this week of that, because the lows for the week hit 558.11. So if anything, looking for a recovery or to play a bounce, it just didn't materialize. So the system maintained its short position. Now going ahead, that price trigger that's on the sheet there, it's going to change, of course, for next week. More than likely, we'll have to see what the system says, but that's where you are right now. So if anything, you would hold your short or take profit. It's Friday, whatever, and wait and see what happens and materializes for next week. But it's been one of those trades where you really had to really play the price trigger so you could catch this. And we had some pretty good trades this week, some really big trades in the pulse waves that were caught, and we'll be getting into that in our next video. Let's take a look at the dollar. Okay, switching our focus now to the US dollar. As you can see, it delved deeper into the oversold part here, but the problem is that it's closing off the lows, but not really good enough to show signs of life and recovery. Right now, the overhead resistance is at 97.62, right above the Kumo cloud, way back up in here. And here we are, the 94 handle, almost hitting 93. We came within just inches of hitting that. We hit 94.18. This is pretty amazing. Okay. We're going right, we're headed right where I was saying. By the end of this coming week here, next week, we should be in that 93, 92 handle. Unless they can come in and really save the day. I don't think the Fed really did a good job in intervening with this dollar. I just don't see that they were able to do it. Yeah, they pulled it up from off the lows, but it still did not recover enough. And we're going to look into the other aspects, other markets, but you'll see here that even the selling in the metals as they intervene on behalf of the dollar, it wasn't really hardcore. Yeah, some negative pulse wave price triggers got triggered short, and were able to make a little profit, but it's nothing that was a big windfall, not like you would expect. So this is still not a good thing if you are bullish the dollar. And this is showing too, in my opinion, the lower the dollar goes, the higher the odds of no Fed hike in the foreseeable future, period, no matter what they say on TV. If you go and take a look at the cash side of things, you can see here that the supports are being, they're feeling that impact wharf, like when there's in an action movie and there's like a nuke that explodes outside. You know how that flash wave comes and it warps the buildings and makes the glass go in and out. That's kind of like what it's doing here with the support here on the trend line supports. All right, so the 2432 did not get bested, but it touched it. Okay, so it wasn't able to break through that 2432 support, but it did test it. It touched it, and that's not what you want to see if you're looking to play a bounce, and this is not giving you that. Neither is the momentum. The momentum is not there either. So I see continued downside coming in the dollar unless they can really intervene and do something about it. The Kumo cloud is playing out like just like the scenario I told you. It's bumping its head, at the bottom here is heavy resistance, and then we're just rolling over. All right, this is a bear market. You had a bull market rally and a bear market, and just like I told you before, this was going to be sold. Yeah, they took advantage. They sold here and they sold here. This is a continuation pattern right here, and that's just how it is. All right, so let's take a look at the petrodollar. The other part of the petrodollar. We saw the dollar itself. Now let's look at the black gold, the oil side of our petrodollar. Here's our crude oil right here. All right. Notice how the crude oil broke out today. All right. It broke out. It actually took out this 4803 resistance and was on its way to going out to take out the 49 handle. We hit 49.35. Okay. So this market was able to actually gain momentum, and then it closed at 49.05. So you took out your first 48.03 and your 49.01 resistance, and closed at 49.05. And so basically you're closing at the high of the day. That is or near it, I should say. We closed 49.05. We hit 49.35. So that's powerful momentum hitting the overbought section. This is in play now to break 50 and really start to test that 60 before it's all over. I think before it rolls back over and comes down to this 44 support to test this, I think we're going to be smiling at 60. All right, that's just the way it's playing out right now. Made you think that in the negative pulse wave it was going to gain momentum, but remember what I told you. When you're inside the Kumo cloud of death, anything goes and you cannot trust the price action. It could have easily crashed right below the cloud, but instead it decided to crash above it. You don't know the play until you come out of the cloud, and that's just it at the end of the day. You just don't know. So with that said, remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can and give nothing back.